SEP-IRAs are employer-funded IRAs for employees, but the money rules feel different than 401ks. Two big quirks: there are no catch-up contributions, and participants can't borrow from the account. On the EA exam, they love testing what SEP-IRAs do not allow, because it's easy to mix up with 401k features. Now, the contribution rule that drives everything. If the employer contributes for the year, it must be the same percentage of compensation for each eligible employee. Not the same dollar amount, the same percentage. Also, the employer doesn't have to contribute every year, but if they do, they can't favor owners or managers with a higher percentage just because they want to. Distributions from a SEP-IRA work like IRA distributions. The employee can take money out at any time, but taxes and penalties may apply. The key exam trigger is age 59.5. If you're under 59.5 and you take a distribution, you start by assuming there's a 10% additional tax. Then you check for an exception. Rollovers are another favorite test area. A SEP-IRA is still an IRA, so rollovers generally follow IRA rollover logic. A distribution can be rolled over tax-free to another SEP-IRA, to a traditional IRA, or even into another qualified retirement plan that accepts rollovers. If you see Roth, remember, that's a conversion concept, different tax result, so read the question carefully. So when does the 10% early distribution tax not apply? You don't need every exception memorized, but you should recognize the big ones the IRS lists. Think death, disability, certain medical costs, qualified higher education expenses, first-time homebuyer up to a limit, and substantially equal periodic payments. Exam tip: the question often gives you one fact that clearly matches an exception. Grab it. What is the latest date that a business can establish a simple IRA for its employees? The options you'll see are September 15th, October 1st, December 31st, or April 15th. This is a deadline question, so focus on the plan setup date, not the contribution due date. Think about it. The correct answer is October 1st. A simple IRA generally must be established by October 1st for a calendar year. A tempting wrong answer is December 31st, because people assume you can set it up by year-end like many other tax moves. But simple IRAs have that earlier setup deadline, with a special rule for brand new businesses after October 1st. Summit Climate Solutions has 110 employees, and all earned more than $5,000 last year. The company wants to establish a retirement plan. Which type of plan is not allowed? A 401k? A defined benefit plan, a SEP-IRA, or a simple IRA? This is really testing one key eligibility limit. Think about it. The correct answer is simple IRA. A simple IRA generally is only available if the employer had 100 or fewer employees who received at least $5,000 of compensation in the prior year. With 110 such employees, they're over the limit. The tempting wrong answer is SEP-IRA because it sounds small, but SEP-IRAs don't have that 100 employee cap.